Good day all. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Monday the 16th of December 2019. We're just approaching 4:10 in the afternoon, and as you can see, the settlements are in. Silver gained on gold today, copper gained on that, and the palladium market, what strength that's showing again. Interesting day. It's a follow-through day. The stock market was up off of the reports on Friday that the deal is done and clarification that came out over the weekend. If you saw Robert Lighthizer on TV, Larry Kudlow, it's all done. They just have to finish up some words. The president today saying it's about 2 weeks away from being signed, but the Chinese are very mum. I, for one, would not be surprised to see some Tuesday reversals, especially happen in stock indices. But let's go first and talk gold. That's what we're talking about. And basically, the market has just been going sideways now, actually since October. That break that carried the market down, it's just been hanging right in here. Resistance back up at the 18-week moving average of closes, and that's all this is a close-only chart, and that comes in at the 1489.80, 1490 level. As you take a look at the daily chart, you can see how the market has just been sitting. Now, what would certainly be bearish, in my opinion, is getting through these lows in the 1450 area. What would be bullish is getting back over the 1490 level, and in other words, staying under that, getting over it, and staying above it. Those are going to be the two numbers just visually looking at the chart. When I take that same chart, and this is it, and I put swing lines on it, the pattern I have now is one of a higher low and higher high. So the pattern of the swing line, which looks to see, are you trending? If you believe, as I do, that a trend in its simplicity can be defined as higher highs, higher lows for an uptrend, lower highs, lower lows for a downtrend, and no trend would have in some manner a higher high and a lower low, but nothing going in sequences. Well, that's how I define them. So what I don't want to see in the short term is 1465.50 taken out. That's about $15 away. Here's that resistance in that 1490 level showing up. And as you can see, the market has been hanging around the neighborhood. The 18-day moving average of closes, that's what MAC is. It's hanging there, and that's often where the market first decides what it wants to do from that zone. So my breakout point would be to the downside, 1465.50, with support all the way down to that 18-day average at 1472.60. One resistance point, another one that's coming in that 1490 area, is the 1500.7, which is the 100-day moving average of closes. And a closer one, the one that I think is now going to be the most important near term, is the 1487.10 level, the Bollinger Band. When you see these black bands, Bollinger Bands, if you're new to these videos, a Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. Now, as the market loses volatility and narrows in, eventually it can't stay narrowed in. So you start thinking of this Bollinger Band as a pipe. And it's a spring. Price is a spring inside of it, especially when you're going sideways. It's ready to break out one way or the other, hence the word breakouts that you hear so often the traders talk about. Well, it generally comes from sideways action, not from a market that runs up and then just keeps running up. So if you can clear 1487.10, then 1500.7 is the resistance. If you reverse down and get under this 1465.50, 1458.50 is the next support, which is still not under that 1450 zone that I thought was so important. In momentum, it's up, not overbought. I consider on the momentum oscillator called a slow stochastic, any reading over 70 on a closing basis is overbought. Well, we're not there. So here's how I'm viewing the market. The trend is up as defined by the swing line. Got higher highs, higher lows. I define bias, which is different than momentum, as the relationship of price to the 18-day average. When it's over it, it's upside bias, under it, downside. It triggers certain technical indicator parts that I work with, such as swing lines and all, and saying, no, the market's in a buy mode. Market's in a sell mode. In this case, it's in a buy mode with support at 1472.60 till that number's taken out with the near-term targets. First, the Bollinger Band, and if it can carry through there with any momentum, then the 100-day average of closes. In the popular ETF GLD, we have a pattern of higher lows, higher highs, bullish. Again, notice the sideways action that's in the marketplace. Take out to the downside 137.98, you could end up with lower highs, a lower low, putting into play 136.83. Where's the upside resistance? The upper Bollinger Band, 139.57, up to the 100-week average of 130.33. Clear this in a meaningful way to the upside, breakout. Downside, get through this, downside breakout. Very important areas. Gold-silver ratio. Sometimes watching base metals move against the precious gives the market the aura of what a trend is going to do. More times than not, sustainable trends in the metals, precious and the like, come from the gold-silver ratio getting down the lower levels. Well, the 18-day moving average of closes, you're basically at it. For the first time since, this peak that we made, and that was on December 6th, but you've basically been staying over this number all this time, as you can see. The market is just starting to challenge it and trying to get under it again. It really has to get under it with a force to say that silver wants to gain on gold, and you'll see that in a minute. I'm just going to do the juniors today on the daily bar chart on this. The senior GDX I'm not going to do. Suffice to say, trend is up, higher lows, higher highs, but a problem develops if the market takes out Friday's low right here, and that number's 38.68. That would break the pattern of higher lows, higher highs, and put the market possibly into lower highs and a lower low, wanting to set up a challenge of three areas: the 45-day average, the 18, and the 100. So I'll be looking at that. You're also in an overbought area. In the silver market, we have higher lows and higher high. The trend is up. Until this market takes out 1689.50. I say the bulls are trying to drive this market now, and if they can succeed in getting over the 1850, I'm pretty sure that's what this number was. Yeah, it is. Then, if they can clear that, the next zone of resistance is between 1739 and 1758, the other side of the coin. Don't take out 1850 and just get under 1689.50. And what would happen is lower highs, lower lows, and you're setting up this zone. We're in an important area here. Copper market, what the copper did today is pretty easy to understand. If we take a look at Friday's close at 278.10, the market had had a reversal. It had spent a number of days over the upper Bollinger Band. You can see right here the settlement was 279.65, just over the upper Bollinger Band of 279.55, over it on this day, 3 days in a row, 4, 5. And what typically happens is you don't go beyond 5. You can, but it's go count them. Don't listen to me. Go count them. Find how many you can find in a year on a chart. And that's what we did. We started a correction, and we're pausing. More important to me than price is what copper's doing in momentum. Both numbers today were over 80 on the close. Both were over 80 yesterday, that's Friday on the close, but not the day before. Will the market embed? It takes 3 days in a row for both numbers to stay over 80. If they do that, then I say the trend is locked in until the red line drops down. Copper today got big pitches from Morgan Stanley, from Citi, from Goldman Sachs. They're all talking the copper's in short supply in emerging markets. China going to use more because of the end of, if you will, the trade friction that's coming on. But that more important than America for those goods, because we're still keeping tariffs on a lot of things, is going to be how Europe and other parts of Asia react. Interesting, the read. I think it's in Bloomberg. You might want to read it. In the platinum market's what? In an overbought condition. It's hit its upside target, the upper Bollinger Band, and it has stalled. So it's a market that's in a bull trend, stalled out. But to get back to these support levels, if you do that tomorrow by taking out 930.70, you actually step out of the uptrend. You'll have the swing line down, but prices at that moment over the 18-day average, it'll go neutral. The market that's the powerhouse is right here. On Friday, and this is the action on Friday, you still had an embedded reading. This morning when the market, when I woke up this morning, you were losing the embedded reading, and I get up 3:34 in the morning. So I'm watching how the market's trading going, gee, is that going to be a turn to the downside, or is this going to rescue itself? As it turns out, it did a great job of rescuing back up over the upper Bollinger Band. This is the strongest metal of 2019, far and away. This has been the bull market of bull markets in metals. Dollar index, bearish. First, we had a bearish crossover. I think I mentioned this last Thursday. The 18-day average got under the 100. Often that leads to lower lows. You got your lower low the next day. All you've done now is bounce over the Bollinger Band. The question is, are you going to embed? Both numbers are not under 20. You're just oversold at a downside target. Trend is turned down, momentum down, bias down. You put it all together, it is interesting. And me being in the board of trade, the interesting part is, I get into an elevator and all you hear is talk about the markets. The board of options, I don't know if you're aware, but I think they sold their facility. They're going to the old U.S. Post Office here, which is a building that's unbelievable in size. But the building's filled up with those traders as they're moving out there, and a lot of them coming in here. I say this because in our office, our writers, they don't have a couple of years of experience, folks. We're talking decades. And when they're covering these markets, they're covering it in ways that you often don't read about. These are not kids right out of business school, and that's not to say they're not great coming out of there. It's different. These are guys and women with hands-on experience, years of it. And they're going to tell you about options. They're going to give you ideas about what the futures are doing, commercial demand for the market, what the farmer's doing. What about what's going on in world trade? What do we see coming around the corner for the metal markets, the currencies? Well, if you're interested, all you need to do is get hold of my staff. They can set you up with a free trial if you're not a client of ours. If you are, you're more than welcome to get it. When I say client, it's either my full research, by the way, and or you have a trading account with us. How do you get to see this? Well, free trial's free trial. Just go to our website at www.iraepstein.com. You'll be able to pick the different categories you want. It can come to you by email and or through any of our applications that we have, be it the mobile app or our desktop applications. You can always call us. It's the old-fashioned way, but it'll get you done in 1 second. You can even click up here. If you're on the internet, it'll take you right to that page. I'm Ira Epstein. You have a great day.